In fact, you'll get that entire conversation on Indianomics by the end of this week, so fret not. But we have to move on to the day's trading action on Dalal Street, where investors woke up to global weakness post the two-day off on account of the Dussehra and Muharram. So today we've seen the Sensex and the Nifty slump 1.5%, and as a result went below the dip and witnessed that we'd witnessed on the day of the surgical strikes that were carried across the LOC. The bank stocks underperformed with cuts of more than 1%. In fact, we're joined by Anuj and Sonia. They'll try and analyze the markets for us and try and get us out of this quandary. Guys, what's happening?
Well, what's happening clearly is that, first of all, the Indian market caught up with three-day weakness of global markets. We had two-day holiday and we came back, and the three-day net result was that globally markets were down and we caught up with that. Intraday, what happened was that the Sensex and the Nifty, and more importantly, the Bank Nifty, went to the surgical strike day low, which was also the expiry day of last series, and that was broken. And that led to further damage. That was contained towards the end. There was a bit of buying at lower level. But what also didn't help matters today was that the Bank Nifty had the weekly options expiry. The weekly options expiry is leading to a lot of pressure on the markets of late, Sonia. In fact, the best example of that was the India VIX, the India Volatility Index, which was up about 8%. And the point that I want to bring home here is that while we'll worry about what happened in our market today, just take a look at what's happened week to date. The Nifty is down 1.5%. The Hang Seng is down 3.5%. The Straits Time is down 2.5%, and the Kospi is down 2%. So really, the big question for me is, have global markets entered a bit of a tough period heading into the US election and the Fed rate hike? I think answer to that will answer where we go from here. But today clearly was a bit of an ugly day.
Oh, yes, it was. In fact, if you take a look at individual stocks, then the key pressure pockets was in the banking space, Anuj. So, you had a big gash in the Bank Nifty, and all your influential banking names, whether it's HDFC, whether it's ICICI Bank, whether it's Axis Bank, even some of the, beaten down names like Bank of Baroda, etc., were under pressure today. Apart from that, other heavyweights like Reliance Industries, Tata Motors, TCS also contributed to the pressure. TCS ahead of its numbers. We also had commodity stocks like Hindalco, Tata Steel, NTPC that also came under pressure today. So it was a secular run on the downside, which is not a good thing for the bulls. On the gaining end, though, Infosys ahead of its numbers tomorrow has closed in the green. So it's an interesting play over there, the Infosys versus TCS game. Then you have Maruti and Hero MotoCorp that were a couple of other stocks that bucked the trend today. In the mid-cap end, you had losers like Dish TV, Jain Irrigation, India Bulls Real Estate, Syntex Industries. But the key question now that begs asking is that, is there a prolonged period of risk aversion that you could see in global equities, because of which maybe our own markets could sell off some more?
I think that is really the big question. But I think technicals will also take over now for our market, because now the Nifty has broken the 50-day moving average. The last time it did that was on expiry day and driven by news. Today we didn't have news and we didn't have the Nifty expiry. So I think the 50 DMA is gone. 100 DMA of 8,400 might bring some respite for the market. But the big question that everyone is now asking is this the first real correction of this bull run? And does the market go to 200-day moving average of 8,000? I think the answer to that will in large part depend on global market, but in some part will also depend, for example, on the market reaction of Infosys and TCS numbers, which of course will officially kickstart the numbers. We've had IndusInd's numbers, but I think that's the next trigger, and that's something that we'll be watching out for.
Oh, yes, indeed. So, Arif, it's back to you on that note. It was a fresh salvo from the bears today. Let's see what the next couple of days have in store for us.